All right, happy Saturday. It is time for another installment of a live playbook, getting those reps in. Super excited for anyone who watches this, and even for me who watches this, that I have a breakout trade to discuss because it feels like the market is maybe coming back into play with these. And maybe I'm late, but this is the first breakout trade that I think I playbooked in a bit. So this is a changing fundamentals earning day one breakout. It's also a higher time frame breakout is the setup on QUBT, and this was on Friday, May 17th. So the bigger picture, the market sold off really strongly from the highs based on tariff fears. We had a huge update, one of the biggest updates in market history based on the 90-day tariff pause. And then we kind of dropped back down, made a lower high, and started to go up, consolidate, and continue to kind of build confidence in the market as the fears of the trade war have decreased. On the Monday before this trade, we had a big up move, and that was based on a China deal announcement. And then more recently, the market has been ranging between 522 and 516. So really the daily setup on the Qs is consolidation. We continue to consolidate near these highs and not that far away from our all-time high. So a little bit more of a bullish bent on the market than we had, just a couple months ago. The VIX has been going down. We finally have broken below 20. So I think the biggest thing here is that it is more amenable to being in positions and holding them a little bit longer because there's less kind of market volatility or breaking news that can just shake you out of the trade because the market is whipsawing around intraday. So that's positive towards kind of breakout and trades to hold. So QUBT is a quantum computing stock. It's kind of how I would characterize it is this is a emerging marketplace. So they're valued differently than an established growth company. I mean, if Tesla had earnings like this or Nvidia, the stock would hit the floor. But because this is something that the expectations are relatively low and people know it's emerging, they had $17 million in income, which was a reversal from a $6.4 million loss. So the profit was due to a non-cash gain from re-evaluating warrants. So it's not even like real income. But revenue did increase to $39,000 from $27,000 a year ago. So this is just really low expectations, but I think it validates that, there's progress being made in the quantum space, which I think is what investors, or speculators really in something like this, because the shareholders on this are more speculators than investors, right? They're going to be more in and out because this is just a more volatile space. So, as I said, the bar is lower. And, also quantum stocks have had periods of strong volatility. It's an emerging theme. And, all of a sudden now with the bigger picture becoming a little bit more potentially risk on, we can see that this is something that then becomes interesting to investors or traders. So, in terms of the stats, I think, this averages 116 million shares a day or 16 million shares a day. We have traded on this day 91 million shares. The ATR is a little under $1, and the short float is almost 20%. So the checks in favor of this from kind of a intraday fundamentals is high short float, hot sector, improving financials in an emerging space. So I think all of those make this a really interesting setup and potentially kind of an A, even though these earnings don't feel like an A. I think at the end of the day, given kind of the bigger picture on this, the things I've talked about, this was an A from a intraday fundamentals. So on the weekly chart, we can see, again, this history of an explosive move. I mean, QUBT went from like $2 to $30 in the space of 6 weeks. And then when NVIDIA's CEO said that quantum stocks are a bunch of rubbish, it went back down to under $10. And it's been consolidating under 10 for 7, 8, 9, 10, 11, 12, 13, 14, 15, almost 18 weeks, maybe a little more. And finally, we are seeing signs of life, as this $9.20, $9.30 level is going to break on this day. So, long consolidation. We're not breaking out to all-time highs. We're breaking out underneath some of these bag holders from this move. But overall, plenty of time for a good consolidation. So on the daily chart, you can really see that we're getting into this congestion zone from kind of the breakdown after the quantum mania of 2020, late 2024. So, there's a 13 resistance level. There's also a 10, 50, and 11 that you can kind of see in here. They're going to become more apparent, the importance as we go drill down. So on the 15-minute chart, one of the bullish signs here is that the pre-market is holding above the after-hours reaction high. The after-hours reaction high is actually the move that broke us above this 928 resistance level, which, from the daily we've been holding for months. We did have one kind of pre-market break above that was sold. So it failed once at that level, but it really hasn't been above that level, closed above that level in months. And so the 928 broke on earnings reaction, held the retest. We then consolidated highs pre-market, sold a little bit, kind of setting up a really good pre-market high break. And you can also see that 1050 level is where we're holding pre-market, which again is a daily level. And that 1120 is also a level that's going to be important in this trade. So when we look on an intraday basis on the 5-minute chart, we can see again, pre-market reaction high. We retest that 928. I guess we dip below for just a minute. We get bought right back up. And then in the pre-market, we go up and we start using this 1052 as resistance. We dip down, setting up that break. And then you can see that 1120 level actually is where, after price discovery, where we set up our opening range. And this is a 40-cent opening range. The ATR is about $1. So, rough numbers, this opening range is 40% of the ATR. And my manual back testing says that the best opening ranges are less than 60% of an ATR. So as 40%, this is like an A in terms of the compression in the opening range. The other things that make this opening range trade an A is the massive volume on the open. I mean, if you look at the 15-minute here, we haven't seen any kind of volume, even the opening range, even close to that in the last 1, 2, 3, 4, 5, 6, 7, 10 days, right? And then we have the tight opening range. We're holding above VWAP. The opening range consolidates above the breakout zone. So we have this 950 breakout zone. We're holding above that. We have this 1052 zone. We're consolidating above that. So we're consolidating above the 1052 against this 1120 number, which is also a daily level. And so, when we talk about setups and strategies, so for me, the factors that make an A breakout setup are the tightness and length of the consolidation In this case, we have a pretty tight daily consolidation. And I'm realizing that I should probably start to quantify that. But it's basically between $5 and $9, so a $4 consolidation, which I guess is not that tight. And it's been going on for many months. We have a previous history of momentum in this stock. We do not have a shakeout before the breakout, and I definitely see that the best breakouts have a shakeout. So we consolidate the highs near the breakout, which is also a good setup. But if we have a little dip going in the breakout that traps a bunch of shorts, that's a good thing too. But given we had 20% short interest, it's probably not necessary in this particular situation. So the strength of the catalyst and the high short float. So there you go. On the opening range break, we talked about this. So I'm not going to hit it again. But, from an intraday basis, I didn't put this on here. But what I did is I bought the opening range break, held through this little consolidation, and then I sold it into the end of momentum. Which, basically I scalped the trade to hold. So what I should have done is, and I didn't even have this on this slide, is I should have bought the break of that 1052 level, at least with small size. And, it puts you in a much better cost basis here. You got to hold through this consolidation, which is not my strength. So maybe that's not emotionally the best thing to do. And then really enter where I did, but then add when we break this little Spencer scalp. I'm not counting this this price discovery as the opening range. It's really this tight piece for me. Everybody kind of looks at it a little different. We have, this like 10-minute consolidation, and then we got this momentum. I think really selling 30% on the failure momentum was the right call. And then we get this really nice wedge pattern that sets up. In here, and the big dog, and it drifts down, and then it finally finds buyers and pushes off this intraday level. And I think the add is really when it pushes off this level, and then all out on the close. But I think that would have been the most effective way. The other effective way could have been to trade this with 0 DTEs. Because at the end of the day, basically if you're buying at the break of the consolidation, you're getting it about 50 cents and you're selling them, if you hold to the end of the day, $1.30, but you could really get $1.40, like right in the momentum move. So we probably had the expansion right here. And then during that 10-minute consolidation, we lost a lot of volatility. But when we had that second leg up, all of a sudden the volatility expanded. And, that's really our best risk to reward. And instead of spending a whole day in this trade, you could spend, an hour and make the same thing as a whole day. Probably even better because it's basically it's a tripling in the price. And if you're buying this, you're risking 20 cents basically to make 60 cents. So it's a 3-to-1. So I guess the 0 DTs weren't the most amazing thing on this. Let's look at the tape here because I think it is pretty interesting. I wish we could have a little better quality here. So not sure why we're having an issue. Can't really read it. Oh, there you go. But you can see, I don't have the tape on this, but here is the volume. This is not an easy one, is to buy this break at 1052, which would have been in here. And these wicks wouldn't have been great. So I don't know. I don't know if I like that first minute. You don't have enough of the data to play out. But I think, what we start to do is we start to put in this flag pattern after this really strong opening drive. And so I put a line in for the downtrend. And you can see we start to hold VWAP, and then we put in a slightly higher low, still holding VWAP, and but we're still seeing that 1023 acting as resistance, and this 1123 acting as resistance. So so I'm starting to look at, hey, are we making higher lows here? We've seen the buying pressure slowly start to build, and we are, because we honored that line again, and we're still kind of pressing up. We're consolidating, but we're pressing up, which again, I call this a wedge ORB. So it's wedging up inside the range, and so you can see this kind of continues into the 10 o'clock hour, and now we start to push up. And I put this box in here for myself to say, if price could now hold in this zone and consolidate, where we had sellers before at this $11 level, I would start getting real interested in putting on a position here. And keep in mind, this is sim, so all these positions here, we're just screwing around, but and learning the program. But you can see we're starting to push up here. The bids, and the volume in this was a little funky. I'd like to see a more active tape for me and my style. That's one of the things that made it a little bit harder for me. But you can see we're starting to see size come in on the bid now. We're just having a lot of size stack up on the bid right here. And we're also seeing, some higher offers. You can see them, at 11.10, 11.12. Keep in mind that buying zone is like 11.20. So you can see, again, we got size on the offers, real size on the offers now, and the bid's starting to stack. So, it looks like we're starting to build a little bit of momentum here, and you can see we're coming right into that zone, that 1150, which you can see pretty clearly on the chart. And now we can start to see on the tape the buyers and sellers responding differently here. So what we're going to really see is a change and a trend develop in here. So we'll give it a couple more minutes to play out. Let me give it one more. Oh, and there you go. Let's go back to that. So let's look at the tape, see what we see. So 13, 14, 15 on the bid. See if we can step up and through. 16, 18, 20. Oh, we just skipped from 18 to 22. And to me, that's a change in character in the tape. And although it's a little bit extended, I would have liked to see the consolidation. I think if we just push back through the 23, I would just buy it, risking against $11. And there you go. In sim, I bought it, and actually in my real trade, that's where I bought it. I saw that candle. I saw that momentum come in. That's a change. And if it doesn't hold and we just sell back down through and get slammed here, I'd be out. I'm really looking for the buyers to step up and hold it above 11.20 now. And if they can't, my stop is to 11, but if it drops 11.20, I would definitely be taking a piece of this position out. And I was playing with these stops, which really didn't work. I'm using Trader Sync instead of Trading Sim, because actually it's cheaper and it gives you a free a free way to track your trades, and it's actually really well organized. So for $300 for the year, you get both. So I'm thinking this is what I'm gonna do. So you can see we are holding. We had a test down there to that level, but it got bought up. A buyer stepped in, rebid it, and now we're consistently holding in the 20s. And you can see the volume actually. I put this line on the volume. We're still not seeing like massive volume. We're not seeing one of the highest volume bars of the day, because I think technically the opening range break is here. But I have in trading dozens and dozens, maybe even hundreds of opening range breaks. Have seen that there is edge to buying it when it starts to change character in the breakout, and not waiting for up here, because honestly sometimes it stuffs up here, and so you have better position here. You can kind of work your way out, or even end up with a stop at break even when it hits high a day, because some days the algos and other traders are just slamming it down at that high a day, and you take a rip there chasing it, versus being in from a better price and being able to have a tight stop. And if you see it really start to slam and fail, you can even get out with a small profit, if not at break even. So I think that's, and also you can put an at this level, and then you have an even bigger position, versus trying to get it all up there and your risk is just a little bit higher. And it feels like there's a lot more false breaks at the top than there are down here. Like this is going to hold, and where it's not going to hold, at least for me. So now we're just kind of playing in here, and I think this goes for a few minutes, so we can kind of fast forward, catch the break of this. So to me, this is wedging again. So again, we're seeing that consistent buying pressure. We're seeing it here where the sellers are not able to work it down as far every time we try to break down, we're holding. And it's the same thing here. The other thing that's interesting, right, is now all of a sudden we went from flat ranging EMAs to trending EMAs, right? The 5 is the white one, the 9 and the 21. And they're all in trend mode all of a sudden. So this, if you look at this versus this, the stock has changed. Price has changed. The buyers and sellers have changed. And the buyers are clearly in control now. So whether or not they can push it through this high a day is another question. But, now we want to see massive volume. We want to see the highest volume bar of the day pushing through. Everybody who said this thing is going to fade and got short in here thought we were going to not work. And then all that 21% short interest that's still sitting in the stock, they're all going to be really unhappy if we break high a day, break 1140, because the next resistance is really at 13. So that is not good if you've got a big short position against this thing. I mean, it's almost 30% of the stock price to go up. So sellers trying to push again into that the zone, but will they be able to hold it? They've tried a couple times. We got a wick in here, got a wick in here. And again, we could also now be seeing the push down before the breakout, right? So we talked about the dip before the rip, and this is the same thing. The daily shows that, and the minute chart, the best breakouts will dip down as a test or as a trap, whatever you want to think it is. And then, all of a sudden we will take those people who got short into this thinking, okay, now it's going to fail. See, now it's going to fail. Oh, repainted that candle, another test. And now we should see the buyers step in and push this thing through if it's going to break. And it might not be in this candle, it might be a couple more, but like that is, the high jumper squatting down before they leap through. So let's see if they can leap through. So 32, 30. See if that bid can start stepping through. Huge. Yeah, we got size on the offer. Look at that. Size. Okay, so that did not do it, but that definitely trapped some people who thought that would go down there. And now 33. Size on the offer at 35. Let's see if it decrements. Yep. Got size there on the offer. Checking out the bid. So this would be an ad spot. If we can rip through 38 and hold and step through, then this is either an initial entry on like a high day, or really like some people would call us the opening range. Like I said, I think this tighter range is the opening range. And we're still fighting it, but we're getting there. The sellers are definitely not winning right now. It's not working. So 34, 35. Let's see if we can push. There you go, 38. Let's see if we can step up and through, or if we're going to fail at 38. So a little pause. 38, 38. Oh, and I'm in. And we step through 41. So now we should see momentum come through, or we could consolidate above. But ideally, we just see momentum. And we still have not seen the volume, right? This was this move up here. But we want to see massive volume, like making all this other stuff look small. So let's see if we can see that. Let's speed it up a little. Oh, now the bidders are stepping up. Bidders are in control. Oh, I redid this because it I don't know, these stops, I thought I could move them with this simulator, but I do like that this has stops where Trading Sim does not, because you can kind of manage your own, it feels more realistic to play with stops too. But they actually they're not drag movable. It just sells the stock. So at this point, I think a safe stop, honestly, if it fails here, I'm completely out. Because we should just rip here. And look, there it is. Highest volume of the day. So now game on. People are chasing. And there's not much to do. But hang out and watch the momentum. Watch the bidders step up and through. Look at the tape has become a lot more active. We're just spraying up. People are chasing. Shorts are covering. You could just see people like, holy schmoly, I got to get out of this thing. That's not good. And look at that. We're up, 60 cents. And, all of a sudden, again, I'm dragging a stop loss up because really at this point, I'd be looking for a double bar break to get out of at least a portion of it. Like I said in the playbook, really it should be like 30 to 50%. But you can see, look, it's extending away from the 5. And see, I rebought my position because I'm just screwing around now. So really we're looking for 13 if we're going to get there, but I don't think we are. So now, look at that. That's different. We have 1, 2, 3, 4 bars. So if we break this, I'm out. Oh, I'm out 50% of my position here. So now, let's move ahead. And you can see that that's what we ended up with, right? That was a good reason to get out. So here's this this big dog. You can see we consolidated in here. We have this downtrend. And I noticed the best big dogs, it makes this little downtrend, finds support, finds buyers, engulfs. And, essentially you get this 2-leg move into the close. So that's the tape. We're going to get out of that. And we're going to do a trade review. So, I think I had really good stock selection. I am really happy.
2025 has brought historic volatility to the markets. And at our firm, one strategy
entry.
stands.
I'm listening to Mike Belfury. I think my entry was really good. I think I did recognize the big dog. I didn't trade it. What I learned is that trade the great idea, not the many mediocre ones. Like The reason I didn't really slam this the way I should is because, again, I got distracted by some less high quality things. And that's, where I'm at is being better at grading. And this was a good one. I also need to spend some time specifically defining when there's a trade to hold. So I need to write out trade to hold rules similar to my trade setup strategies, and I need to back test them. So how I could have done this better? I could have bought the opening break above pre-market resistance. Yeah, but that's not my style, so I don't know that I'm jumping on that because I think, I tend to get burned on those and oversized, and it just kind of like creates an emotional roller coaster. I should have added on the opening range break like I showed you, or the high day break, and then added on the Spencer scalp, and then added on the big dog. And how I do it differently is see above. So that is a cool trade, and I'm excited that maybe we'll see some more of these because, this is the trade that got me consistently profitable for quite a few months last year. Opening range break. So I'm hoping we're going to see more breakout setups. And so it's interesting to see the market set up these breakouts, and hopefully we see a lot more. But I really did enjoy this playbook, and I think it's hopefully will help me and anyone else who wants to spend the time to watch it.